Hey everyone, welcome back to the channel. If you're new here, my name's Paula, and on this channel we don't just look at crypto prices, we look at the bigger picture behind what's actually happening in the financial system, global markets, and the technology that could completely reshape the future of finance. Because honestly, I think there's a lot of people in crypto right now feeling confused. There's so much noise online, so many narratives, and so many people pretending they know exactly what happens next. But what I want to try and do on this channel is zoom out, connect the dots, and help normal people understand how all these macro stories, institutions, governments, and crypto markets are actually connected. And the deeper I've gone into researching this video, the more I genuinely think something much bigger is happening underneath the surface of this market right now. Something feels different in the financial system. And I don't just mean crypto prices. I mean the way governments are behaving, the way institutions are behaving, and even the way some of the biggest Bitcoin voices in the world are suddenly changing their language. Because over the last few weeks, we've seen the US Treasury quietly buying back debt, discussions around liquidity support intensifying, Japan beginning to shift the policy that helped fuel global markets for decades. And now Michael Saylor, the man who built his entire reputation on never selling Bitcoin, suddenly admitting that selling Bitcoin may actually become necessary as part of a treasury management. Individually, these stories seem completely unrelated, but I don't think they are. In fact, I think they all point towards something much bigger happening beneath the surface of the global financial system. And I think Bitcoin itself may be changing in ways that most people still fully haven't understood. Because Bitcoin was originally supposed to exist outside the system. So, why does it suddenly look like it's becoming part of it? And if that's true, what exactly does Bitcoin become next? What if one of the biggest shifts in Bitcoin's history just happened and most people completely missed it? Because for years, Michael Saylor represented something very specific in this market. He wasn't just another investor. He became the symbol of absolute conviction, the face of the never sell mentality, the man who told the world that Bitcoin wasn't just an asset, it was the exit from the system itself. And now suddenly he's changing his language. Not completely, not dramatically, but enough that people who understand markets should be paying attention. Because recently, Saylor acknowledged that Strategy could potentially sell some of its Bitcoin in the future as part of treasury management, balance sheet optimization, or dividend obligations. And if you've been in crypto long enough, you'll understand why that statement matters so much psychologically. This is the same man who built an entire identity around the idea that you never sell Bitcoin. The same man who became famous for saying things like, there is no second best, and treating Bitcoin almost like digital property that should be accumulated forever. So when someone like that suddenly starts talking more like a treasury manager than a Bitcoin maxi, I think it tells us something much bigger is happening beneath the surface of this market. And honestly, the more I started researching this story, the more I realised this isn't really about Michael Saylor at all. It's about what Bitcoin is becoming. Because at the exact same time this is happening, we're also seeing the US Treasury quietly buying back its own debt. We're seeing growing discussions around repo market liquidity. We're seeing concerns about treasury market stability. We're seeing Japan slowly shifting away from the ultra-loose monetary policy that helped fuel global liquidity for years. And we're watching crypto itself move from being anti-establishment technology into something institutions are actively integrating into the financial system. Individually, these stories seem unrelated, but I don't think they are. I think we're watching the financial system slowly transform in real time, and Bitcoin is no longer sitting outside of it. Because if you really zoom out, the old narrative around Bitcoin was actually very simple. The entire point was that Bitcoin would exist separately from governments, separately from banks, and separately from TradFi. It was born during the aftermath of the 2008 financial crisis, a response to money printing, bailouts, and the loss of trust in the system itself. That was the emotional core of Bitcoin from the beginning. But look at where we are now. BlackRock has a Bitcoin ETF. Major institutions are building crypto products, governments are discussing regulation frameworks, stablecoin issuers are becoming major buyers of US Treasuries. Ripple is working with financial institutions. Chainlink is positioning itself as infrastructure for tokenized finance. And now, even the biggest never sell Bitcoin advocate on the earth is starting to sound more like a corporate treasury manager than a revolutionary. That is a massive shift. And I actually think most retail investors still haven't processed what this means. Because the reality is, Bitcoin is slowly becoming financial infrastructure. Now, before we go deeper into this, I think we need to talk about what's happening in the wider financial system, because this is the part that connects everything together. The United States currently has over $35 trillion of debt. And importantly, it's not just the amount of debt that matters, it's the cost of servicing it. For years, the system worked because interest rates stayed incredibly low. Governments could borrow cheaply, companies could borrow cheaply, liquidity flooded the financial system, and asset prices exploded higher. But now that the rates are much higher, something has changed. The debt itself is becoming expensive. And that creates a problem because the US government constantly needs buyers for its debt. Treasury markets are the foundation of the entire financial system. They're being used as collateral for banks, hedge funds, derivatives markets, repo markets, basically the plumbing underneath modern finance. So when people hear that the Treasury is buying back debt, they assume it's some small technical story. But it matters because it signals concern around liquidity and market functioning. The Treasury isn't trying to erase the debt problem. These buybacks are relatively tiny compared to the size of the overall market. What they're really trying to do is maintain smooth functioning in a system that is becoming increasingly stressed by high rates and huge refinancing needs. And this is where Japan enters the story. Because Japan has quietly been one of the biggest pillars supporting global liquidity for decades. Japanese interest rates stayed near zero for years, while US yields were higher. That created one of the most important trades in global finance, the yen carry trade. Institutions could borrow cheaply in yen and buy higher yielding assets somewhere else. US Treasuries benefited from this. Global equities benefited from this. Risk assets benefited from this. Even crypto indirectly benefited from this massive liquidity environment. But now Japan is changing. The Bank of Japan has slowly started allowing yields to rise. The yen has become a major macro story. And if Japanese capital begins staying at home instead of flowing into global markets, that changes the entire liquidity picture worldwide. And this is why macro traders suddenly care so much about Japan. Because if liquidity tightens globally, everything changes. Treasury markets become more fragile, borrowing costs rise, risk assets struggle, and eventually policymakers start searching for ways to stabilise the system again. That's why the Treasury buybacks matter. That's why the repo market discussions matter. That's why liquidity support matters. And that's why Bitcoin matters too. Because whether people like it or not, Bitcoin now trades increasingly like a global liquidity asset. When liquidity expands, Bitcoin tends to perform well. When financial conditions tighten aggressively, Bitcoin struggles. And the reason why this is so important is because it means that Bitcoin is no longer behaving purely like some isolated anti-system technology. It's becoming deeply connected to the mechanics of the global financial system itself. And honestly, I think Michael Saylor understands that better than almost anyone. Because Strategy's Bitcoin model only works in a world where Bitcoin continues outperforming the cost of capital over time. The company has raised enormous amounts of money through debt, preferred shares, convertible notes, and equity issuance in order to buy more Bitcoin. As long as Bitcoin keeps appreciating faster than the liabilities attached to that strategy, it looks genius. But when you enter a more complex macro environment with higher rates, tighter liquidity, and greater Treasury market stress, suddenly Treasury management matters a lot more. And I think that's why Saylor's language is evolving. Not because he's bearish on Bitcoin, but because Bitcoin itself is evolving. And this is the part that I think is genuinely fascinating. Bitcoin may have started as a rebellion against the financial system, but it's increasingly becoming absorbed into the next version of it. And whether people want to admit it or not, that process is already happening. Just look at stablecoins for a second. Stablecoin issuers are now major buyers of US Treasury bills. That means part of crypto is literally helping fund the US government. Think about how crazy that is compared to the original ethos of this space. Then you've got tokenized treasuries growing rapidly, BlackRock moving deeper into blockchain based financial products, Swift testing interoperability with blockchain systems, governments discussing central bank digital currencies, financial institutions exploring tokenized collateral and digital settlement systems. This is no longer crypto versus the system. This is crypto becoming part of the system. And actually, I think that's the bigger transformation happening right now, because the old system itself appears to be reaching its limits. Debt levels are massive. High interest rates are becoming painful. Governments need liquidity stability. Treasury markets need functioning collateral flows. Banks need efficient settlement systems. Global finance is becoming increasingly digital, and AI is accelerating the need for faster, more programmable financial infrastructure. So instead of destroying the existing financial system overnight, what may actually happen is something much more subtle. The system evolves. Traditional finance merges with blockchain infrastructure. Digital assets become integrated into collateral systems. Settlement becomes tokenized. Liquidity becomes programmable. Governments regulate crypto rather than ban it. Institutions absorb Bitcoin instead of fighting it. And if that's the path we're heading towards, then Michael Saylor changing his language suddenly makes a lot more sense. Because never sell is the language of ideology. Treasury management is the language of institutions. And Bitcoin is increasingly moving from one world into the other. Now, whether that's good or bad probably depends on why you entered crypto in the first place. For some people, this is bullish. It means adoption, infrastructure, legitimacy, and integration into global finance. For others, it feels like the exact thing Bitcoin was supposed to resist. But regardless of how people feel emotionally about it, I think this transition is already happening. And honestly, I think this phase of crypto is going to look very different from the last one, because the market is maturing. The easy retail mania phase, where everything pumped together just because liquidity was everywhere, may not work the same anymore. Capital is becoming more selective. Institutions care about infrastructure, liquidity, regulation, interoperability, and real world use cases. Governments care about control and stability. And crypto projects themselves are increasingly positioning to become part of that future financial architecture. And that's why I think all of these stories connect. Treasury buybacks, Japan, liquidity stress, stablecoins, tokenization, Saylor changing stance. They're all signals that the financial system is slowly transforming, and Bitcoin may now be evolving from an outsider asset into one of the core assets inside the next version of global finance. And if that's true, then most people still have absolutely no idea what Bitcoin is actually becoming. If you enjoyed this video, make sure you like, subscribe, and let me know your thoughts in the comments, because honestly, I think this is one of the most important conversations happening in crypto right now. And as always, if you want to know the exact strategies we use to make money in both the bull market and the bear market, we've made a completely free trading course for you. It's called the Crypto Liftoff course, and the link is in the description of this video. Thank you so much for watching, and I'll see you in the next one.